Let's talk about imbalance or FVG. It is fair value gap. Um, what is imbalance? Let me show you what it is. Look at this candle low, this bullish candle low, and this bullish candle high. The stick or the wick of both of them did not touch each other. So an imbalance or a fair value gap is a gap between two candles. So there is a candle between two candles. So it takes three candles to create an imbalance. You need three candles to form an imbalance. One, the candle below, and the candle above, and the candle in the middle of the two, making three candles. So this candle high and this candle low did not touch each other. What we had here, actually a clean move, so smooth, of one single candle just went up. What this means is that there was a massive bullish move here. The price was so much in hurry to reach a price level. This is an extremely bullish footprint in the market. It's a sign that the smart money actually pushing price heavily to reach a price level. Now, when price then returns back to this imbalance, this level, that place, it becomes a support for price. And you see what happened here? It will reach that level, and went up. If you check again, this is another candle again, this candle low, and this candle high, we saw an imbalance here. They never meet here at all. Never meet. The wick of this candle high and the wick of this candle low never meet each other. What we have was just a single strong bullish move that passed through in between both of them, and price went up. It's a sign that price is extremely bullish and that the smart money are actually pushing price heavily higher. When price will turn back to this imbalance, price is meant to close above it, not close below it. When price closes below it, that is, price violates that imbalance, it's a sign that price is becoming bearish. But when price respects it, close above it, like what happened here, and so it's a sign that price is still bullish and price will still go higher, and it happened, price created a new high right there. Now, having said all that, how do we use imbalance to measure a move or to read the footprint of the smart money on the chart? It's very simple. Any move that lacks imbalance shows that move is not strong, either bullish or bearish. It might fail more easily than when there's an imbalance there. A move where there is no imbalance shows that the pressure that the smart guys are using to push price is very low. But when there's an imbalance, it's a sign that that move is a strong move and it will likely continue. Now let me show you here. Price broke this high and created a new high here. Left behind this imbalance here. You can see. Went up again and that imbalance again. What this means is that this price is heavily bullish. Heavily. And now, whatever happened here, just a retracement. So I'm still expecting price to break this high, this Bitcoin high, to create a new high, something like this, and then like this. I'm expecting price to break this high. As long as this imbalance level are still there and price keep respecting them, price will eventually break this high. If price close below this imbalance level, this the last one here, that means price is about to become bearish, extremely bearish. Why? Because this imbalance, they are actually support levels for price. They are invisible support level for price. So if price close below this first one, it means that the move has become weaker a little bit. Now, but there's still hope for bullishness because of this next imbalance below. If price close above this imbalance, then can continue buying again. But if price close below this imbalance, this one, it means that the move has now turned bearish and price will break this low next. So understand this, that the easiest way to read the footprint of smart money on your chart is through imbalance levels. They reveal to you the depth of the move. For example now, let me show you an example here. Whenever you see a move without an imbalance level, that will most likely become a ranging place for price. Look at this. There was no imbalance there at all. This was the last imbalance. This place. What happened? Price broke this imbalance, reversed a little bit, then broke it, then closed below it here. And also inside this bigger imbalance here, and then close below it here. The moment that actually happened, price has become bearish. You can see it only retraced a little bit and then broke this low too. So we use imbalance to read the footprint of smart money. Now when you also look back, this move, new bearish move, actually created an imbalance here, showing that it is a serious bearish move. And now imbalance here again. Don't forget how I divide an imbalance for you. This candle low for a bearish move, this candle low and this candle high never meet each other. But here, all the wicks meet in this one, this level. So this is a balanced price range. It's balanced. All the price levels has been traded into multiple times. Therefore, there is nothing here. There's no new order here to be filled. What an imbalance actually means is that there are some price order that were never filled within this price level, in between these two levels. There are some order to sell that were never filled. Why? Because price was so much in hurry. You can see if you want to board a vehicle or a taxi, say okay, a train for example now, and the train was so much in hurry to get to a destination or the vehicle, by the time you get there, the train has move on. And you cannot run to reach that entry door again. So that means the train has left you behind, and many others too as well. Because the train or the vehicle was so much in hurry to get to a destination, they left behind some passengers whose request to join the move was never honored, because they are not patient enough to wait for all of them to enter that vehicle or train. Now, similar thing is happening here on the chart. Price was so much in hurry here to get to a destination, to drop, to take out this low. Therefore, price never really retraces back. It just keep on going lower and lower. That means some orders here were never filled. For this order to be filled, price has to trace back inside in the future to fill those orders that were never filled. Again, an imbalance there. So we use imbalance to read the footprints of smart guys in the market. Now we have another imbalance here again. This is another one. This low and then this high never meets. Price broke lower, broke this low here, closed below it, right? Then price then retraces back to the imbalance there. Now here the imbalance become a support level here. You see, multiple times price never close above it. It's just continue going lower. And an imbalance there again. It's an imbalance, a small one here. That extra confirm this one. The price went up, close above this one, and above this imbalance to here. Now, when this happens, that actually give us a sign of a bullish sign. But you see, price never take out this high here. It just went lower. Now, this was just a liquidity activities to fill up some orders that are left to be filled before. Now, when price was coming down, there's an imbalance here again, here too. You see, price went into it again to fill up those orders, and then it began to move lower. So you see, when price creates an imbalance in the market, price tends to return back to the imbalance again in future time to fill those unfilled order. So that imbalance level becomes a support level for price, or if it is a bearish move like this, it becomes a point of resistance. Price is not meant to close above that imbalance if truly we are bearish. If it closes above it, that is a red sign that that bearish move might be a little bit, expect some kind of retracement that's quite deeper than normal retracement. Again, another imbalance here again. We see this imbalance here. Here, price entered into it, touch it, right, and then drop lower. This is a retracement to fill up the unfilled order. So imbalance is a way to measure the smart money footprint in the market, to read it. We have another one again here. Price never come to it. Then another one here again. Price will trace into it multiple times, then move lower here. Then another imbalance there, with price touch here, then close above here. When this happen, then it's a sign that this high will be taken out next. It shows that this move is very strong. For the price to close above this bearish imbalance here, shows that there is a heavy force pushing price. So Imbalance is the easiest way to read the footprint of smart money on your chart. If a range does not have an imbalance, that range should not be trusted. For example, now here, there was no imbalance there. What happened? Price took out the low to reach this imbalance below. So if a range does not have an imbalance, that range can become a liquidity point, because price always move seeking out liquidity, both internal one and external one. Now in later videos, I'm going to explain this to you in more detail. You see an imbalance here, price touched multiple times, they went up again, and that imbalance here. Now this is a rare occasion price closed below this imbalance to touch the one below and respected it and went up. From there on, you can see price range here to do what? To touch this imbalance below. Touch it, went up again. You see? And that one here again. Price went below it here, but never closed above it. There's another one here too. Price tapped it a little bit, they went up. Never since then, price began to go higher. Now another imbalance is a small one. You see, price never closed below the imbalance. It honored the imbalance here multiple times. So you see, imbalance shows you what the smart guys are doing. Now here, there was no imbalance here. What happened? Price took out this low. Why? Coming down to this imbalance level here. See, touch it multiple times, it went up. Now, you have an imbalance there again. That's tap it a little, very little here this week. Now I expect price to go higher from here. You see, it's already honoring it, respecting this imbalance. So, imbalance is very important. When a move does not have an imbalance in it or a range, that range has very low rate of working. That range is more likely to fail than to work. This is very important. Please go on your chart and practice this imbalance level. Locate them on your chart, work them out, and your eyes will be open to see that price tends to respect imbalance a lot. Thank you. See you in the next video.